Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, comment down below. Follow me on Instagram if you just want to contact me. This is my sports card channel, but send a message to me at AIH_sports. But I usually put sports cards there, but once again, if you want to reach out, comment section, whatever. Okay. So the market has been very volatile, and here's just a few things, right? I've stated that for the markets to go higher, the dollar needs to be weaker, right? The dollar is way too strong, and a strong dollar at this point is going to impact trade in terms of exporting. And in addition, if currencies go way out of bounds, way out of whack, what ends up happening is you tend to have turmoil. And I discussed in the last video, the Bank of England flinched. And I was looking just at a few things where the market could be giving clues that we are getting very close to a reversal in a lot of the bearishness out there. And just a few things that I looked at. First of all, I looked at this one guy. I think his name is Steve Strazza. He's at All Star Charts. I met the founder of that. I went to him speaking. His name was JC Peretz. He came to Chicago in 2019, and I decided to listen to him. Or it may have been 2018. I don't remember when, but I remember listening to him talk. It was quite interesting. But one of the guy he hired is, I think, Steve Strazza. And I'll show you some charts. It says, it's regarding the dollar index. Extreme volatility in both directions is common at turning points. This is what he said in his tweet the other day. Last time the Dixie had a single day gain as large as Friday was March 19, 2020. Last time the dollar index had a single day loss as large as today was 03/26/2020. The Dixie peaked on 3/20/2020. Stocks bottomed the next trading day on 03/23/2020. So it's quite interesting where you're seeing a lot of volatility in the dollar index. A lot of it, in my opinion, is based on the volatility in the euro. You have to remember the dollar index mainly consists of the euro, about 60% or 58%. Then it's the pound, then it's the Japanese yen. So 80% of that basket is full of currencies that aren't the best out there. But it's, in my opinion, we're at a point where it's overstretched. And Steve Strazza also had a Chinese yuan chart. And it seems that whenever the yuan gets overextended like this, you tend to see a reversal. So that's what I'm looking at, okay? There are clues in the Forex markets that things are about to turn around. Does it mean it's going to happen? No. But I'm just looking at these technicians who look at these charts, various types of charts out there, okay? And there's extreme bullish sentiment in the dollar index. So that's why I'm in favor, or I believe that markets will go higher. That's why precious metals will go higher, crypto will go higher, in my opinion. I'm not telling you how to invest or speculate. I also saw this on David Brady on his Twitter page. It says, fund managers have their biggest net short position since November 2018. And you have to remember these speculators, they're chasers, right? They chase the trend followers, right? Small speculators have their lowest net long position since December 2018. So right when the market was bottoming out, okay? Banks/swaps have the lowest short position since May 2019. And he's talking about precious metals, right? He looks at precious metals, okay? So the banks and swaps, they're usually, I believe, in the futures market called commercial hedgers. And when commercial hedgers are in extreme positioning, or when they have an extreme positioning size, that's when markets, from my understanding, tend to reverse, right? When they're positioned, the smart money's positioned in a very aggressive manner in one side or the other. So I'm looking at, okay, the funds, the smart money is getting long precious metals. The technicals are looking like the dollar index is about to reverse. So I'm just looking, okay, this is probably in my opinion, I'm not telling you what to do. This is a good opportunity to get into risk on assets. Once again, go to your financial broker and see what's a good strategy for you. But this is what I'm looking at, okay? And ultimately, this is going to, if the trends do follow the way that I look at it, next 18 to 20 months should be pretty good, in my opinion. But we shall see. There will still probably be volatility because of, number one, more Fed rate hikes. Number two, you have to look at the election in November. But at the end of the day, inflation expectations as of right now, it appears is going down, which should be bullish. And I expect greener days in the, if not weeks, months ahead. All right, guys, let me know what you think. Remember to smash that like button, subscribe if you haven't, comment down below, guys. Thank you. Bye.